Everyone, I hope you're doing well. Today we're going to talk about short-term bias. So by that I mean that if you're going to be a buyer or a seller, so your system should be in a way that automatically and systematically puts you in a right side of the market, even if you are aware of it or not. Okay. So the reason for this is that if you don't know which side you have to take trade, okay, all other steps of your trading is going to be wrong, okay, because this is the first step. You're first going to just define your direction, later you're going to define your zone. At the end of the day, you're going to find a setup and enter the trade on the side that you think from the very beginning it's going to, let's say, happen. Okay, this is your forecast. Now, the point is that why is this so important? I could say this is the reason for 75% of your strategy make. Okay, it means that if you are right on the side of the market, I mean direction of the market, usually you can just manage the trade. Okay, so the problem is when you're trading, you don't have full access to your logical part of your mind, and that's why you can see the market in different ways. For example, some people say that, okay, it's so easy. I'll go here and just enter buy. As soon as they enter and put buy on, and market reverses and say, oh, what's happening? Some people define it based on the candles, and some people are defining it based on the swings. Okay, but you have to know that the candles are not building blocks of the market. Swings are, and you have to have a way to define the swings and direction mechanically. It's not based on your ideas or your eyes, because if it is, I mean, uh, discretionary, it is based on your judgment, you're going to screw it in the long run. Okay, it should be in a simple way, and you don't know it, and unconsciously it must be very simple but not very simplistic. Okay, so you have to just obey the rules. You have to have easy and simple rules to just know that if you are doing the right thing or wrong thing, and later on, so when you're just coming and taking the trades, you're not going to have the second guess. Okay, this is very important. You have to have clarity. That's very important. That clarity gives you insurance, and you have to choose, just prove that you are on the right side of the market. And this is the way that I'm going to talk about that how you're going to define it. So we have different ways to do that, and you have to go with the thing that you want. I mean, it is really based on your preference and your personality, and no difference. There is no difference between these two systems that I'm going to just teach you. So look here, we're on 15 minutes chart. Now we have 15 minutes chart, we have 1 minute chart, and we have 15 seconds. Okay. Now here, if I just a little bit, yeah, zoom in, let me, okay, you can see that. Now, some people use these legs fractals, okay, or we can say high and lows of the candles. Okay, now that we are in the live market, here we have a candle, okay, green candle, which is now forming here. Okay, now if we want to just trace back our direction and we want to just define the direction, this is very obvious here, right? But sometimes here in the places like this, it is not that much easy for you to define it, right? Now you can use these tools like this one, and afterwards you're going to compare highs of the candles. If it is, you can see that it is going up, right? So you can define the highs of the candles. Okay, but it's better to just wait for the candle to be closed. Let's imagine that this is a closed candle. Okay, now if I compare the highs of the candles, this high is higher than the previous one, right? And this one is not higher than the previous one. So it means that if I want to draw it, we have a high and we have another high. Okay, now this is point A, Let me make it a little larger. Okay, this is point A and this is point B. So whatever falls, sorry, but yes, whatever falls, I mean the lowest point between A and B is going to be our swing low. Okay, and this one is going to be our most recent swing. Okay, I mean B here is going to be our most recent swing. This one is going to be our um, swing low, and this one is our high. Okay, now look here, this is higher than this one. Now this is higher than this point. Okay, so between A and B we have the lowest point. Which one is the lowest point? Here. Okay, so while we had this one, okay, so we have this candle formed, the first candle is formed. Let me make it larger. Okay, so this green candle is formed. Later we have this reversal point. Later it broke it, right? So now we have this movement. We had this, and this. So this is our swing point, right? Now here, what you're looking for, so what is the use of this one? Okay, the point is that when you want to just try to take a trade, you want to be on the right side. If we have a lot of sellers, you want to be a seller. If you have a lot of buyers, you want to be a buyer. Now we have a lot of buyers. How do we know that? Look, this shows that, this proves that we have a lot of buyers here, right? Now, okay, here we have some buyers. Okay, they defeated the sellers here. If I want to just wait a second, please. Okay, here we had some sellers. They wanted to catch tops and bottoms of the market, right? But look here, these buyers, okay, defeated these sellers up there. Now, if you go there down in the lower time frame, what do we have in 1 minute? Look, this is a very clear point of movement. Okay, so where I'm supposed to just enter the market now? Okay, I'm on the right side of the market. I mean, I'm right on direction of the market now. Where am I supposed to just enter? So the best way to enter the market is doing the same thing that you have done here. Here, you're looking for. I mean, you have to wait for these candles. Okay, in the lower time frame, actually, these candles to come down. Okay, look, these candles come down. Okay, retest one area. It could be your valid pullback zone. It could be your supply and demand zone. It could be liquidity sweep, and again returning back. So you have to wait for this one to come, and again wants to go up. Here it forms another directional bias. Okay, so you would say that, okay, now like the live of the market right now, so sometimes it doesn't come down like that. Yes, you're right. So how can I know that? Where am I supposed to just get inside in trade? This relates to, it is dependent on the momentum of the market. Okay, if we have very strong trend like this one, you cannot expect the market to come down and retest this area, or even sweeping this area and come up. Okay, so now sometimes we have some ways to just go around the system, go around this one. Okay, you can use after this one is formed, you can use first entry, okay, or second entry. What is first entry and second entry? This is not my setup, it is Albert's setup. Okay, so he was defining his setup like this one. For example, let's say we wanted to just hunt this area, right? The same which happened here. Now look at this one. After we did this, I'm going to show here. After we have it, we have to just compare, because we want to find it in the pullback, right, in the zone. Now we have to just compare the highs of the candles when it is we want to buy. Okay, whenever the high of the candle is taken, okay, like this, let me make it a little, okay, bolder. So here you can get inside a trade and your stop loss will be down there and your take profit will be up there. Okay, so and the point is that you have to compare the ranges between the low and the high, and your target must be more than your stop loss. If there is no, actually you have the setup but you don't have enough money here, we don't have enough trapped traders here, it isn't worth taking the trade. Okay, but like this one here, no, now let me just go back to this one. Now let's imagine that we are here, right? Okay, we had these candles. So okay, now here we have some candles that they don't have any turning point. Okay, I'll just explain it in the other one. You're gonna do the same logic for that one as well. So look, let's imagine that we want to just hunt this side. We want to trade based on this one. What you're supposed to do is that, look, you have to compare the highs of the candles. So this high is higher than the previous high, but this high is not higher than this. I mean black one or red one is not higher than the previous one. It means that we have a U-turn here, right? So this is our point A, this is our point B, and the lowest point between A and B is our swing low. Okay, so this is our swing low. Okay, now look, if I want to just connect these together, it was coming up, it went to B, came to the lowest point here, and went up again. So now if I go to the lower time frame, I will see that this one is our swing low. Again here, as we defined, okay, this is our swing low, and it goes up like this. Okay, now we want this bias. Okay, now imagine that we are here, right? We are here in the market, real market. Okay, live market. Okay, now how can I just try to enter here for buy? Can I enter here? Yes, you can enter here, but how do you know that it's going to go up? So you have to wait for a place that it gives you the best price comparing to this momentum, comparing to the strengths of this um, higher time frame. So you will, after you will have this one, you have your high here and your low here and your most recent swing is here, right? Now, like that. So whenever you have it, this one is formed and you have a reversal movement in this one, you will shift the time frame. So you will shift the time frame so that you can see this pullback a trend. So will you go short here? No, you have to wait these pullback areas. Okay, if I fix it in the lower time frame, this is going to fall here. Okay, and this is going to be here. Okay, and the same here. Because of the difference between the time frame, the graphic just does that. Now this is our A, and this is our B, and this is our swing low area. Okay, now so how should I know that where I'm supposed to enter the market? Now, as I said, when we have this candle is formed, we have a reversal movement, right? Now we have to just here follow the high of the market in order to buy it. Why? Because we want to just be on the right side of the market. Let me put it there. So okay, here again, here again, if I want to make it a little larger, here again, here again, sorry, and here we have the breakup what candle here with this one. So you can jump into the trade, but it could possibly come down and take you out. So what should you do? The first thing is that you have to compare that. Let me make it a little larger. So now you have to see that where is it coming? Why is it reversing from here? There must be a logic behind it. Is it retesting an area? So yes, an area that we have a lot of candles, like here we had a lot of candles, okay, accumulation, let's say. So we have a lot of buyers here and we have defeated sellers, I mean here, right? So I'm going to show it to you. These are defeated sellers. They wanted to sell. These are defeated sellers. Okay, they couldn't make it, and maybe they have closed their position here if they sold here, or some of them maybe here. But now all the bulls are in control. Okay, here, this is the area they came, and the battle happened between these people. Okay, we have this one, and also here we have buyers. So obviously buyers are in control, right? Now, this is just the first, I mean, signal, okay? So the best thing is that, as I said, you have to wait for this formation, this one. Again, here you can consider this one, and this one, and here you can enter the market, okay? Here in this point, you can enter the market, or with the break at this one, it doesn't matter, or with retest of this one. Sorry, you have to buy, by the way. So sometimes you say that, okay, I want to buy here, but it doesn't come and tag me into the trade. This is something you cannot do anything about. Okay, we have either a risky position or a confirmed position. You have to choose between one of these two. You cannot have both of them at the same time. Sometimes you have it, but not all the time. Okay, so but this thing that I said happens frequently. Okay, now how do you define your direction here? The same stuff. Okay, what did we do here to define B, C, A? Okay, the same stuff here. Okay, now this is going up. Now, if you want to compare it, this is our swing point, right? Swing low in the lower time frame. Okay, it's very mechanical. Now, this is the, okay, our high part. Some people want to just enter the market here based on the candle break. Some people want to enter the market based on this break, and some people want to enter the market based on this one. So based on your own psychology, if you want to just get inside a trade based on the confirmation and more confidence, it's going to be your, I mean, confirmation trades. And after having this formation of uptrend, I mean this formation of uptrend, you have to enter the market. Okay, you have to take the trade, not you, I mean your position. Okay, and what is your target? Your target should be somewhere. Again, we have some sellers, right? These are the place sellers are waiting, and we have a lot of people here, right? And if they are defeated, market goes up. But you have to just know that what your expectation of the market is. So this was for a long scenario. Okay, I want to just give you another example for short scenario, like here. Okay, now look, the momentum is very, very strong. Okay, now, for example, now here we have we had just this uptrend. Later here, our bias has changed. Okay, okay, why has it changed? Because now that, let's say, imagine that we are in this part, in this point in the market, these candles are not formed yet. Okay, now we had a high and we had a low. Okay, now here this candle is formed and broke. Oh, sorry, this is the one it did. So it breaks this candle's low, right? So let me get rid of this. Here, this is our A point, and here is our B point. Okay, Now like this. Our swing high is where? The peak of, the range that AB falls in. Like here, it went up and it came down. Okay, like this. So here is our swing high. Okay, now, is our trend confirmed? Not yet. So if you're an aggressive trader, you want to just take the, tops and bottoms. It has its own risks, but it has a great reward. But if you can stand the mental pressure of staying in a trade that it gives you 3 to 4 and 5 and 6 reward, or 10 or 20, it doesn't matter. It depends on your mental capacity. Okay, so here you can just wait for this one to come up, and again it breaks point A again, right? It happened there. Where? Here, right? It happened here. Now, this is our high, and this is our, after the close of candle, it's gonna be here. Okay, you don't need to wait till this candle is formed 100%. Okay, you can, after we have this direction is formed, 1 2 3 4, we're looking for hunting something in here. We want to just sell here. Okay, now, okay, then we will go to the lower time frame. Hopefully you can find it over there. Yes, this happened here, right? Okay, now you say that, okay, where should I enter the market now? What should I do? The best and logical thing is that you need to just wait for any sort of pullback. Okay, here we say that we're gonna get inside the market, but I don't see any pullback here. What should I do? This is the thing that we call it market cycle and momentum. Okay, comes into the play. So you have to just trade based on this swings. Okay, and all of these candles in the lower time frame, what are they? They are swings, right? Okay, so after the time, the time is passed. Okay, based on this time, okay, chunks of the time, they're just giving you 1 minute, 5 minutes, 15 minutes candles. Okay, now here, track the highs and lows. Okay, here, from here, we have down, this one again. So how can I just define this one? It came down, it went up and came down, right? And here, up there, and it goes up. So you can enter to all of these pullbacks. Okay, you can, if you get confused, okay, here you can go to the lower time frame. Okay, 5 seconds time frame. If the momentum is very high, you have to go to down in, I mean, very very lower time frames. Okay, we're gonna just wait. Okay, look, this is 15 seconds. The previous one was 1 minute. Even here, we don't have very clear point to enter, but it is a little clearer than the previous one. Have a look at this one. Now, you want to just see your pullback coming to some place to retest it. Okay, here even this one is retested, right? But the point is that, okay, maybe it retests this part and it goes up and comes down, and you enter here, let's say in the break of, not this candle, not this candle, not this candle, this candle here, this breaks. Yeah, this is the break of the candle, because when the market was forming, okay, these candles, okay, we didn't know that it's going to go up and come back. Okay, we say that, okay, we have some resistance here, we're gonna get inside this one. So if you get inside this trade and you put your stop just exactly below this, sorry, about this one, your stop will be hit and you will be out of the trade just with this candle. Okay, and market will go on your positions side, right? Now, that's why we say that the trading is just something of probability. That's why you have to have the checklist. Okay, if it is hit, it means that okay, based on my scenario, based on my strategy, I should have been taken out here. Okay, now I have another option here, right? Now, the first entry was okay, not a good position then. It didn't give me the profit I wanted. Now, again, I want to just get inside a trade here. After this one, again, I put my stop there, let's say, and get this trade up until the this swing that we have some buyers. Okay, yeah, this is the better place. Okay, now again the same idea. We're going to just track the lows of the market here. I mean lows of the candles. Here it didn't tag you in. Here it didn't tag you in. This is inside bar, so better not to just consider that. This one didn't tag you and this one didn't, this one didn't, this one didn't, and this one did. So you put your stop, if you put your stop there and you're targeting here, not down, okay, up until here. So is it possible to be taken out of the trade and have a stop hit? Of course you have this probability. You have to know where the market is going and retesting. And you can also go down the, down in, let's say, time frames to find, just pinpoint the area that it's going to give you the best retest area or liquidation. They're sweeping the liquidity and later it comes down afterwards, or it is retesting the supply and demand area. Okay, so but you have to be, the point is that the most important part is that you just have to just consider the momentum. How strong is just this movement is. In that case, you can decide that okay, if I'm going to decide based on the candles alone, or if I'm going to decide based on the swings. Okay, that's very important. So, but as far as you're on the right side of the market and you manage your positions right, it doesn't. You don't need to just widen your stop here. Okay, you say that okay, let me put my stop like there. If you have predefined your stop and from the very beginning it is here, that's okay, because if you define it here, okay, and you say that I'm going to risk 1%, but later you widen your stop loss there, this 1% goes up to 3%, 2%, or whatsoever. It's becomes so risky. You have to take your stop here and later wait for the another position. You're not just revenge trading because you have a plan. If you have a plan and you trust it, I don't think you're gonna just do a logical stuff, because this logic and this system is like a car that transports you from point A to point B. Okay, it is not in your control. The car is taking you. Your strategy, if it is defined based on the logic and it has the condition that it is guaranteeing your success, and you can have the ability to uh, let's say commit to that, apply it in the real market, and it is simple and trustworthy and is based on the logic, it's you're doomed to be successful. Okay, so that's the point. You have to just define your rules in a way that they are automatically and systematically put you in a clearly right side of the market. And if you're just going to have a losing position, it's not going to be a lot that it's just going to mess with your psychology and with your capital. Okay, so the critical point for this system is that you have to have a trend. If there is no trend, this kind of other, analysis is like meaningless. So why do we have the trend? What is the reason that we have trend? Buyers and sellers, a lot of buyers and a lot of sellers all together, that they create supply and demand areas. So it doesn't matter where it happens. Okay, so accumulation of candles are the places that the battle between the buyers and sellers happened, and the direction it takes, after this range, this fight, it shows that who is in the control. Okay, and if it is established trend after the direction is changed, not just a week or like stop hunting or liquidity sweep or something like that. So I hope this was useful for you. If you have any question, uh, please comment down, and if you want, you can share this with anyone that they need to be profitable and they're struggling. I'm sure that I have been struggling for a long time, and this channel is for helping people to get rid of this um, hopelessness. Okay, this is kind of a place that it can help people. So you can share it with your friends. Okay, as you have noticed, I had never asked for subscribing or sharing or something because I'm not looking for uh, followers actually, like other like YouTubers or Instagrammers or gurus or out there that they're looking for get money out of this, I don't know, subscription, watching time, advertisement, and such. Okay, I'm not looking for that from the very beginning. I put the rails down in your drill with me section. Okay, you can go and do the drills and later watch my videos and see that if you are on the right side or wrong side of the market. I mean, if you're doing the drills correctly or just not actually incorrectly. Okay, so even with the paid I mean courses, you cannot find this kind of drills. The problem with the traders is not that they don't know things. Sometimes they know too many things. They give you a lot of opposite actually biases. One confluence says buy, another one says, another signal says buy. Okay, you will get confused. The more confluences you have, the more in trading means the more confused and scattered your mind gets. Okay, so because you don't have systematic practices and drills, the result is that you're going to have a scattered mind. You don't have clear mind when you're taking decisions. Okay, and if you don't have clear mind, you don't have clear direction, you don't have clear decision, and you don't have belief in your positions, and you're going to just wiggle with your trade position, widening your stop loss, tightening it. Okay, so as Mark Douglas says, we have just fears like FOMO. Okay, I've lost this opportunity. Okay, so this is the end of the world. Okay, FOMO will kick in. If you're waiting for a position to come and tag you in, but it didn't happen, fear of missing out will be painful. Okay, it is painful, yes. And if you are waiting for your position and you're tagged in and you get your target is hit, but market goes without you in the position. In this case, you have the fear of leaving the money on the market, right? So again, the uncomfortable feeling comes in. And the third scenario, which is I think the worst one, is that you're waiting or you have FOMO, jump the gun and just enter the market, and it comes back and takes you out of the market with your stop, fear of being wrong, fear of losing, okay, kicks in, and you try to get your right back without even knowing it. Later, you come back and look at your positions and see that, ask yourself and question yourself that, why did I get inside this trade at all? So, Mark Douglas was right, okay, and like a teacher who's dealing with students, like a police officer who's dealing with criminals, like a clerk, bank clerk, or anyone who's working dealing with people who they deal with their clients. You as a trader are someone that you have to deal with your emotions of regret, anger, FOMO, and more important than all of them from the very beginning is patience. When you're in the trade winning position, you're going to be fearful. The reason is You are trying to protect your self-image. Your self-image has connection with your result and outcome from very childhood and even for, I mean, centuries. Okay, so when you want to do something, you're looking for the outcome, but your outcome in trading is not your the money that you're getting it. Your outcome is not the money you're getting in the trade. The outcome in trade is the process that creates the money in the long run. The process that you're committed. The more committed you are, no matter how much money you earned or lost, okay, you are the winner. You have to be happy when your stop is hit what you are right in your decision. It is a little paradoxical, right? That is the paradox. As Mark Douglas was saying, those people that they are winning traders, they're thinking differently. The difference doesn't make them spooky people or some people that they're, I don't know, antisocial or something. Sometimes it makes them, but maybe they are not aware that doing that. But I'm telling you, if you want to just be a profitable trader, the best thing is that you have to just focus on the cause that produces the effect. Effect is the result and the money, but not in one single trade, not in two, not in four, not in five, overall. Okay, depending on your win rate, it's gonna just define that in the long run you're gonna be profitable or not. So while this long run happens, in short term, you need to just deal with your emotions of hope, your emotions of fear, your emotions of anger after the trade and try to punishing yourself or punching the market and revenge trading. Patience when you don't have your waiting and market doesn't reverse to the place and zone and you want to enter. Leaving the money on the table when you're just closing trade, I mean your position, and it goes without even I mean if you were in the position you would had 100% growth in your account. So ignorance is the bliss. Okay, but consciously you have to be ignorant, not unconsciously. So you have to ignore these emotions, but consciously ignoring this, not unconsciously. Okay, you have to know the reason why you are ignoring it. You don't want the emotions that they're triggered play with you. Okay, so they're gonna trick you. Your mind is very, very powerful. You're gonna get tricked. I hope this one was helpful. I mean, the last part of my video was, I think, much better than the first part. So please watch this last part over and over for yourself and share this video with anyone that they're in need of someone who's showing them and taking their hands and teaching them how to take trades, like a person who's teaching you how to drive a car. Okay, so that's all about it. Thank you for your time and your attention. Take good care of yourself and see you in the other one. Bye bye for now.